Hey guys, what's up? Spen here. So in today's video, I have a very exciting trade idea to present to you. I've already invested about $10,000 into this. And now I got this idea actually from Seeking Alpha. They came out with an article and it was very compelling. So of course I did my own research. I put in probably 20 to 40 hours of research in this over the past couple of weeks. Super compelling. I think you guys are gonna really like this trade idea. Now the sector I am gonna present to you guys is very cyclical. So it booms and then it busts. So you need to have an exit plan if you're going to initiate a position into this stock or into this sector in general. I'll go through my plan with you guys. Now, before we do get into this video, make sure to drop it a big thumbs up if you learned something and find it informative. And feel free to subscribe if you want to see more content like this. So this sector is really a hidden gem. It's starting to pick up a lot more mainstream attention. So I do think there's a short window of opportunity to jump into it. The sector I'm talking about is the cargo shipping. So believe it or not, cargo ships are absolutely on fire right now. They're experiencing probably the best economic condition for them ever in history. And most of their stocks have already boomed quite a bit. There is one stock though that hasn't, and it's because it just recently IPO'd and it's extremely undervalued. It can 2x based on valuation alone right now. By the end of the year, if this bull run keeps on continuing, by the end of 2021, I would expect to see probably a 3x in this stock. Now, before I get into the stock, let me explain to you why this sector is on fire. So, it's really because of COVID. COVID has disrupted supply chains massively, and we're finally starting to see that impact. I'm not gonna get into the yield rising, but inflation is coming because of these disruptions. But this sector is benefiting massively from it. So, as you can imagine in this sector, these ships go to their docking ports and they drop off all their cargo. COVID has caused a massive slowdown in this. There's a lot less workers working in the facilities there. People are getting sick. They're off of work, and there's just generally a lot less people working. Not only that, but there's also a lot more demand. So the reason why there's so much more demand is because people aren't spending money on lifestyle things. They're spending money on actual tangible objects. So they're spending money on upgrading their house, buying more furniture, buying stuff online, so e-commerce, which requires ships like this to transport goods, and also so air traffic. Usually there's air cargo as well as how they transport goods. That has been limited massively. So these cargo ships is the main source of transporting goods right now. So there's a massive supply and demand issue. Way too much demand, very little supply, and it's extremely hard to fix the supply issue in this sector. That's because, well, one, it takes years to build these boats, so they can't just fix it instantaneously. And also a lot of these boats have recently been scrapped because this sector has been in a bear market for quite a while. So during bear markets, they scrap their boats, they have too much supply, they need to level it out with demand. However, just recently, they've been flooded with demand and don't have enough boats. And it's expected to take a couple of years to have enough boats to meet this demand level. So anyways, supply is very low, demand is really high, and it's expected to continue like this over the next year to two. Now, there's a way to track how much these companies are charging. And this varies depending on supply and demand. And right now they're charging way more than basically ever. I think in the year 2003 to 2008, they were charging similar to this, but they've been on a big bear cycle for the last 10 years almost. So it's the freight rate index. And if you are going to invest in this company or this sector, it's important to track this every week. They update it on a weekly basis. So if we look at what they're actually charging, if we go here to about a year ago, they were charging $14.51, and that's global. It's the average of the global rate. And you can see in the chart, it's risen dramatically. And then if we look a little closer here, you can see just in the last 3 months, they've actually doubled what they're charging. So now we're at $4,300. A year ago, $1,400. 3 months ago, it was around that $2,500 mark. And it's still climbing. So at this rate, these companies are making bank, massive amount of net income they're making. And like I said, this is a cyclical market, so you'll want to be investing into this on the up. I'm going to be tracking this very closely. When I start seeing this retracing, then I'm going to start trimming my position and taking a really close look at the macroeconomic environment within this sector. But definitely over the next few months, there's still going to be, really big problems in supply chains. So this rate should hold up pretty nicely. And yeah, like I live in Vancouver and there's massive cargo ships always in the harbor area. I've noticed a big increase in congestion. There's lots of articles that are talking about this congestion as well. And this is just too much demand, not enough supply. If you guys live along the coast, I suggest taking a look for yourself. It's most likely congested. Now, the company that I'm invested in, and I think it represents probably the best opportunity, it just recently IPO'd, and that's Zim Integrated Shipping Services. So right now it's trading around $20. It IPO'd, actually opened up at $11. It was supposed to IPO between 16 and 19, but there wasn't enough demand for the stock. It was IPOing right when that GameStop frenzy was going on, so it was really just forgotten about. It dipped down to 11, and then just in the last month, it's doubled up to where it is now. So this company is based out of Israel, and it's one of the biggest shipping companies in the world. I think it's the 9th biggest. Don't hold me to that though. It's a big company and extremely undervalued. There's a really good analyst who's an expert in this industry. So I want to play a 2-minute clip of him talking about Zim and his bull case for it. It's really informative. I think you guys are going to really like it. So I'll play that clip now for you.
So Zim is a liner. They're a more specialized liner company. If you think of like Maersk and CMA CGM and you say that's like UPS or FedEx, then Zim is kind of like DHL. They're a more, or maybe like XPO Logistics. They're a more specialized company, a lot smaller, but they're in an alliance with two of the largest companies, and that total alliance controls 34% of the world's ocean freight. So they control 1/3 of the world's cargo. It's pretty impressive. And this company, because it's involved in shipping and nobody wants anything to do with it, because we all know, even I'm very bullish, and even I say 2021 is a cyclical peak, this thing trades at less than 2 times earnings. My projections for earnings, of course, 2021 projections, but less than 2 times earnings, less than 2 times enterprise value to EBITDA. And then you look at the peer comps and you look at the closest peer is actually Hapag-Lloyd. It's traded on the German exchange. And if you look at the peer comps to Hapag-Lloyd, and you said Zim is, even if you said Zim is worth maybe like 1 turn less. So, say Hapag-Lloyd is worth 5 times, Zim's worth 4 times. Even if you handicap Zim, they should still trade somewhere between $40 and $50. And the stock, like I said, we're buying it in the 11s. Then I added some more in the 14s. I think today it's in the 16s. And the pure comp, it's readily available on the German stock exchange, Hapag-Lloyd. If you just give them the pure comp and you discount the pure comp, then Zim would be 40 to 50. So it's a remarkable, what I think is a dislocation. Clearly the Seeking Alpha, I'm very honored by this. Clearly the Seeking Alpha Pro editor team agreed. They've published that on their website.
Okay guys, so that's the video I have for you today. My plan with Zim is to hold it until at least $40. Ideally, I could see the next earnings being absolutely amazing. I think they're going to blow out earnings. There's very little information around this stock right now, so it's actually under the radar. I've done a lot of research into it. Different analysts are saying anytime now they're going to be releasing more information about the company, more guidance. That could be a big boost in its share price. Next earnings, I think, is going to be a huge catalyst that's going to send this stock up. By next earnings, I think we're going to be approaching $30 to $40. Once we do get into that $40 range, I will start trimming as we become closer to the end of the bull cycle. Again, this is cyclical, so you don't just want to hold it forever and then let it crash. You want to take profits on the way up. This isn't an Amazon where you just hold forever and forget about it. You want to be tracking that freight index I showed you, looking at how the supply and demand's going throughout the world. Right now, very bullish in the sector, lots of demand, very low supply, and that's probably not going to change anytime soon. But yeah, anyways, that's all I have for you in today's video. Make sure to drop this video a big thumbs up if you liked it, guys. Thanks for watching till the end. Really appreciate that. See you guys in the next one.